பண்றேன். Hi Arun, how are you?
Hi, Vignesh. Yeah, I'm good.
So
You're doing well.
another week of uncertainty, volatility, and heartbreak for a lot of investors and traders in the market. So what is happening globally? How is the war situation now?
See, I mean, I'm not a geopolitical, that's not my forte, but I'm
Mm,
just looking at the news and
mm,
information coming from different areas and trying to understand what that means. So basically, yeah, you have a situation where US, has gone to war with Iran, but without any support of allies. And then,
mm,
of course, it seems like right now US has underestimated Iran's capability, and
mm,
Iran has gone ahead and blown up many things strategically. But most importantly, the oil fields, right? So in Qatar, in Saudi Arabia, in Oman, so all the GCC countries. This has been a
mm,
huge shock for the
mm,
markets. So as you know, like the oil prices have gone high, right?
mm,
Now there are a lot of problems with this. Like, so one is you look at this from a temporary point of view. What is happening next 1 month, 2 months? Will the ships, will go through the strait and get deliveries? That is one problem. And the
mm,
other main problem is the oil fields itself, right? So once you blow up the infrastructure, it takes a lot of time.
mm,
First the war has to cool down. People have to come back to work, and
mm,
then there has to be money put in. It is going to take time to bring back all this infrastructure back.
mm,
Oil in the last 20 years anyway has been underinvested all over the world because everyone was saying that green energy is the one. So a lot of
mm,
money went to the solar and wind, but oil never got any investment, right?
mm,
So a lot of oil fields across the world are depleting. So in
mm,
this backdrop, when you have this war and when you have these kind of hits to like the most one of the most important regions for in terms of the oil supply, then you have a big problem, right?
mm,
Just to give you
correct.
one example, right? Just to give you one example,
Mm,
Qatar has a
mm,
LNG plant. LNG
mm,
Qatar, I think they supply, if I'm not wrong, second or third most in the world in terms of supply.
mm,
And in
mm,
that, they have two complex.
mm,
So out of the two complex, one of the complex, I think Pearl GTL complex, that was hit
mm,
very hard by Iran like 2 days back, and
mm.
then they lost like most of the things there. So that GTL plant took 20 billion of investment, and it was built uh, around 10 to 20, 10 to 15 years. So
Mm,
from the scratch, it took 6 years for that
mm,
plant to be, even start production. So when you hit that kind of thing, the implication is huge, right? Because
mm.
if you see in the from the plant, what do we get? So one is your all the so basically it's like the ga-
Yeah,
liquid
inflation
to
will go up.
gas,
Mm,
liquid to gas plant where things like very so some of these gases they have to be properly trapped and maintained, so used in semiconductors and so on. So even one of the use cases like pure
mm,
kerosene, which they use it for the airline fuel when they mix
mm,
the fuel and make the fuel, right? So there are a lot of
mm,
nuanced things come from there. Not many facility in the world can do it, and to
mm,
even build it, it is taking 5 years. So why I'm
mm,
saying all this, you just can't look at this like okay they bombed it, when war stops everything goes back to normal. That's not going to happen. So
mm,
especially that is why one of the investment thing is like oil. Yeah, oil shock is there, but to get back and the price to stabilize, it will take a longer time. So it
correct.
is going to be higher for longer.
Yeah,
So that is the major implication that is going to be there.
ceasefire is not going to help the crude oil prices in the near term. So just
No,
now
no.
news is
So
coming in.
ceasefire will help in the near term. But my point is, the stoppage of the war doesn't mean that the oil price will go down all the way back to $60. So it is right now at
Okay.
$100. It
Hmm.
might go to 120 also. If the war
Hmm.
escalates, it will go to 120, 150, 200. Who knows, right? But my point
Hmm.
is, at some point, it is not going to go back to your $60 level that you had
Hmm.
like 2 months back.
Immediately it won't happen. Got
Yeah,
it.
and there are a lot of fallouts from this, so we need to still understand because once you not, it's not about just oil. Now also
Mm,
about petro products, right? So you don't have sulfur, you don't have other petrochemical products,
mm,
fertilizers, urea, all these
mm,
are impacted, right? Now,
got it.
now the industries are scrambling for supply, and some
Mm,
of them are going to force majeure, meaning that they cannot satisfy their customers' contract. They are saying because
mm,
they didn't get the input feed, right? So you're
mm,
having these issues as well. So first is number one, there has to be a ceasefire or stoppage to war.
mm,
Then need to assess and rebuild these infrastructure, and only
mm,
then you are going to get back your actual supply of
mm,
from say from 2025.
got it. Yeah, just now news coming. Two more tankers set to cross Strait of Hormuz for India's oil LPG lifeline. So there are a couple of vessels that have arrived as well. So let's head into Nifty. What happened to Nifty last week? So we had a gap up on Monday, Tuesday. So the market was extremely bullish for the first 2 to 3 days. Till Wednesday, the market was in euphoria. It was basically refilling the gap down that happened in the previous week. Everything that happened, every fall that happened in the previous week due to the war, everything got filled up. And on Wednesday night, three key triggers happened. So one was crude oil shock. Crude oil crossed $100. Second one was Fed decided to pass the rates. They did not do rate hike or rate cut. So they decided to pass it for now. So probably for the whole year, we may not see any further rate cut. That is the second news. And then third news was HDFC's chairman resigning, and along with that, he made a statement that I have my own conscience and I have my own ethics. The bank is not aligned with my ethics, so I'm resigning. So the HDFC Bank stock fell 7%. So Thursday was a proper bloodbath, 1,850 point fall in Sensex. So can we look at Nifty charts and see where it is headed right now?
Yeah, so let me just share my screen and then you
Yeah.
can have a look. So if you see here, I'm in the Nifty weekly charts. So the first thing is, as we talked about in the previous video, you are seeing a down drop. So if you see here, this trend line, it's been clearly broken here. Okay. So the
Correct.
trend line is broken. And I in the last time I was also talking about this possible cup and handle kind of happening. So you have this cup in the MACD, and then there is a handle that is now going below zero. Usually
Mm,
when you trend this MACD goes below zero, that's bearish, right? So that's
mm,
exactly correlating with your drop in the like the channel breakdown here. So
mm,
if you see here, I mean, this is the weekly 100 SMA. So we have gone below that, and also we've gone below this trend line. If I just
mm,
zoom out a bit, so you can see that every time the price touches this blue, every time the price touches this blue, it goes back up. It touches the blue, it goes back up, right? It
mm.
touches the blue, it goes back up. Usually, even from here, the Nifty long term always try to
Correct.
stay in the 100
So in
weekly moving
March
average.
2020, it broken
Yeah, so it broken here,
during the
right?
COVID
Now
crisis. Yeah.
doing the coincidences. But when those kind of break actually happens, the fall is usually longer. Okay.
Hmm.
So in some situations, there are situations where you will, if you actually see, this would be the 200-day moving average.
Hmm.
So this would be the 200. So sometimes you also get support at the 200-day. Okay. So
Hmm.
it depends. And you see that most of the time it gets the support. If I just go
Hmm.
back, there are situations where you do go into these. So in 2008, so they
Hmm.
went even below the 200-day moving average, right?
Hmm.
200, not daily moving, but weekly. So we are still not there. So you could get a support here at this
So
line.
basically, yeah, this is the most important line for us right now.
So right now you could get a support around the 21
21
200.
735.
Yeah. And on the if in case if say suppose if the war is all of a sudden stopped, maybe there will be a bump up. So at that time it
Hmm.
is very important to see is it crossing above 24,400. Okay, because
73.
that is
Yeah.
the one where if you really want to go back to your bull territory,
Hmm.
then I would say this is where it is. between 24,400 and the region that you are in is the indecision area, where
Hmm.
right now mostly it is going bearish. So the
Hmm.
sellers, there is no buyers, volume goes down, sellers come.
Hmm. Correct.
They try to, now the magnet is here. Okay.
Hmm.
So magnet is in the 200-day moving average. So it
Got it.
might be that in next come week,
Hmm.
couple of weeks, it will go here. And then
Hmm.
it might spend some time. If things don't improve, then again it might fall. So we
Hmm.
don't know that yet. So for
So,
now, for me, that this is the main level that I'm looking for.
so in 2020, even it fell below the 200 EMA, is it?
Yeah, so of course
Okay, that
that
was
happens,
steep.
right? So the 200 weekly. I'm not even looking at the daily. So
Hmm.
weekly,
Okay,
it fell.
WMA.
If you see, yeah, if you see, just from the 200 day to this one, it fell as much as 29%. Okay, so
Hmm.
this is once, because once you're in that fall, once you lose your 200 weekly, you're in a very bearish territory, right? So then
Hmm.
the fall gets faster.
Yeah.
Of course, but of course, if you see that if situation improves, then you come back V-shaped recoveries usually.
Yeah.
So
Can
it's
you go to
always
2000? What happened in October 2000?
1 second.
The previous recession.
So that was in 2008, right? So 2008 also
2008,
you
yeah,
had
it fell
a
below
drop.
200. Oh, oh,
Yeah, it
yeah.
fell below, but you see that it took a lot of time. So see,
Hmm.
when the down drop started 2008,
Hmm.
when it actually entered the bottom October. So it for 7 months it was bleeding, right? And
Hmm.
then it couldn't from October 2008 to March 2009, another 6 months, he couldn't get out. It was still
Yeah,
in
the P
slump.
ratio remained
Only
between 10 to
yeah,
15 at that
because
time. Yeah.
because yeah, in 2008 you had like a 1 year plus recession, right?
Hmm.
So
Yeah,
that
yeah.
is the other thing.
Yeah, can you
So
go to 2000?
2000 was a dot-com bubble, right? So dot-com.
Correct.
See, but remember that you're in Nifty. So
Okay,
Nifty
2000.
only from
Correct, correct.
yeah, while
Yeah,
2000 had
2001
impacts.
October it was. October it fell
Yeah,
below. It again had a strong support at 200.
you can see that from here, from the dot-com boom cycle ending,
Hmm.
it was a slow, gradual thing.
No, in 2000 we had, you can see that
Yeah,
200 WMA it has touched. It fell below in,
yeah, yeah,
yeah, it
yeah.
exactly got
See,
support there.
yeah,
Even in
it
the
got
rest.
support, but then what happened? It couldn't get past the 100-day, right? And
Hmm.
then it fell back again. This was a
And
strong
then,
rejection here. When you see this kind of rejection where it can't go up and then it
yeah, and
gets
then
rejected like
September
this,
2001 was the war. I mean, the
yeah,
Twin Tower, September 2001.
yeah. So you can see that this went like 11%, right? But that was the bottom actually. In
Hmm.
in some
So even
sense,
before that, it
that
was
was not.
falling. Okay.
Yeah, yeah.
So,
So
but,
it is like this.
hmm,
I'll show you something interesting because Indian economy, as we know, is very much relevant with the oil prices. So this is
hmm,
just in Gemini. I just did a check. So I
hmm,
asked it to provide, Brent
hmm,
crude oil versus the Nifty returns for the
hmm,
year. So you can
got
see
it.
that every time, which is like 50% or
Hmm,
50 to $70 range, you will
hmm,
see that the Nifty returns are normal, right? But when
hmm,
it goes abnormal is when it touches near more than near $100. You can see 2008 crisis. So of course there are many reasons, but
hmm.
oil was one of the reasons for India, right? So whenever your oil prices go to this Brent 100 plus, you those are weak periods because oil is the most important commodity for India and
Yeah, 85 to
for every
90%
sector.
imported. We are importing in so much
Again,
oil.
uh, see in the 2011, right? 2011 100 for 2 years, it was 100 plus. So you had minus 24% in 1 year, and of
Hmm,
course it recovered somewhat, but still it was keeping low, right? For three
hmm,
years, you had 3 years of 100 plus, and you had 2 years of low returns, right?
hmm.
Of course, when you come out of it, it does starts
Yeah, that
to
was the
go up
election
again,
week.
right?
Modi
So
came into power 2014.
yeah, yeah. But still, you see that, and also one more thing is when you have these oil things, yeah, there is a lag effect. So that is
Hmm,
why you still see that,
hmm,
you see these kind of drops. Again, 2020, 2022, you see these low years, right?
hmm,
So
hmm.
this is not perfectly correlation, but usually when your input prices go up, all the sectors impacted by that goes
Yeah,
down, right?
possible to add a chart in TradingView, Nifty to oil chart.
We can do that. So let's
Yeah, that can
see,
give a
give
better
it back.
picture.
Okay, I might have to go to the. Okay. So I remember in 20 when crude oil was high was around 2022, right?
Hmm.
So during this period, of course, Nifty came down, right? So
Hmm.
so you do see that correlation. And then 2022, when the drop stopped,
Hmm.
so that's when the Nifty kind of recovered, and then now it is like this here, right?
Yeah.
So and again, like this is the I mean this is abnormal because during this time, as you know, the crude oil went almost zero because of COVID, right? So there is
Hmm.
some abnormalities in this ratio, but yeah, essentially that is the thing. So yeah, there you go.
Yeah. So yeah, next question about the one is the policy Fed rate. They did not do a rate cut, and the expectation is there won't be any rate cuts in 2026 hereafter.
Actually, situation has moved on the last 2 days.
And
So
US
yes, Fed
inflation
rate
is
cut.
also a bit high.
Yeah. So see, one aspect is Fed is not cutting the rate for this rate meeting, but in the last 2 days things have moved on. I'll just show you the uh, two-year yield chart of this. You can see that when the war began, the 2 year it was the downtrend for almost
Mm.
2 years. Okay, and now the last 2 3 weeks when the war started, you can see that it went from 3.3 to nearly touching 4.
Mm.
Basically, what this means is your rate cut. In fact, instead of pricing in a rate cut,
Mm.
market has actually now started to price in a rate hike in US
Oh,
by December of this year. Okay,
okay. So
so
multiple
so
reasons.
what?
So one is inflation.
Yeah, of course. So basically, what they are seeing is you are going to get an inflation because of oil price hike, and they
Mm.
also see that this oil is for longer, right? The higher for longer, meaning
Mm.
you go from $60 to $100 plus, and then you stay there for a lot of time. So that means the more time you spend at a higher oil price,
Mm.
you have problems for your industries, your food cost, every cost goes high, inflation goes high.
Mm.
So inflation is sticky. So when the inflation is sticky, what happens? You have so basically the Fed. I mean, see, the Fed wanted to Fed and Trump wants to cut the rates,
Mm.
but with inflation running hot, it is going to be a big problem, right? So
Correct.
also you can see that in the gold chart. So this is the 10y minus 2y. This is the spread. So
Oh.
long-term yield minus the short-term yield. You can see that we are seeing some cracks and it is trying to go down here, right?
Mm.
Now what is happening is also the 10-year is also moving higher. 10-year is also moving higher because you have the sticky inflation fears and the rate hike possibility is also going to be there. Now, because of this, in the last 3 4 weeks, gold has also kind of given out. So it's kind of dropping. So this is one of the reasons where now gold is a zero yielding asset, right? But
Mm.
now you're getting higher yields for in this market for the bonds. So that means you have another option. So some of the people who were in gold, they are like maybe profit booking and then trying to move into these high yielding assets. Okay, but
Mm.
it doesn't mean gold will really go down. I think it will stabilize around $4,000 or something, like maybe another 5 10% drop is there, but it
Mm.
should stabilize. So from then on, we don't know. Like we need to see, wait and watch what will happen.
Yeah.
So the of course the other implication is when you have inflation and other things, the economy slows down, and then you're going to have a recession. So that is also on the cards from now on.
Yeah. So if bond yields stay high, FIIs may continue to sell the Indian markets and continue to invest in the US, especially
Yeah.
when
So that is one of
INR is very
the
high. Yeah.
yeah, that is one of the reasons. So if you see the Dixie, if you see the Dixie, you can see that from February onwards, the Dixie has been, the US dollar has been going high, but still it's not cracking the 100. It is having some kind of a resistance.
Hmm.
So it's not completely going into US, but there is a tendency to move towards US assets and US dollar
Hmm.
during crisis times. So we are seeing that reversal, but unless 100 is breached in the Dixie, I think there is still a case where you could have drop of dollar maybe for later this year. But I mean, like the more time we spend in the war, I think the dollar will be dollar will get more money inflow. So yeah,
Hmm.
so then naturally, money will move out of India. So see, the simple thing, right? You are in the biggest cost is oil. Oil is
Hmm.
high. If oil is high, the cost of producing goods is the margin shrinks for the company. When the
Hmm.
margin shrinks, the earnings shrinks. So why would a foreign investment invest in a shrinking margin business, right? So that's
Hmm.
basics.
Hmm.
So for things to get back to normal, oil has to really come down.
Got it. Got it. Yeah. So for long-term investors, maybe this is the. I'm just sharing my screen. So if you look at the Nifty P ratio, right, it is at 20.23. So right now we are in the fairly valued zone. So maybe this is a good time to start accumulating some shares for long term, some mutual fund units for long term. As this
Yeah.
keeps going down, maybe we can aggressively allocate. So right now the market situation looks like it looks bleak, it looks bearish. So we may see further downside. So
Mm.
as that happens, yeah, we may continue to add, but this can be a good time to start investing if you're new to investing or if you have close to 100% cash. Yeah, thanks, Arun. Thanks
Yeah,
for
like
the.
I mean, I'll just go back to the weekly. Yeah,
Mm.
yeah, sure. I just want to make one point, right?
Yeah,
So
yeah, got it.
when you looked at the weekly chart I was showing,
Mm.
whenever it came down to the 200-day
Can you
moving average,
share? Do the
it
screen share
was the
again?
place where you kind of
Yeah, can you do
see.
the screen share again?
Yeah. So in the Nifty. I'm talking about the weekly, right? So in the weekly, you saw that so the black is the 200-day moving average. So that is here.
Mm.
So that is around 21,700, right? So whenever in the past if you do your lump sums, or when
Mm.
you are in the 200-day moving average,
Mm.
you get a good
Yeah, you tend to
position
get
of
a good
entry
return. Yeah,
in the Nifty, right?
correct.
Yeah, but this time I'm not saying that you will have the and it will stop here. It might do your 2020 where it might go another 20-30% down. So what I would say is you can do staggered
Mm.
lump sum investment. One around when it drops to this the this
21,704.
21,800,
Yeah.
and then maybe do your rest of the ones maybe around whenever you
Yeah,
see
I
like
think if you
the
add 300
war is
week
ended or
MA, it will show another line probably.
yeah, like for this one, you just wait for the news of the turning of the
Correct.
event, right? So when
Mm.
you know that the macro is turning, and then you
Mm.
see at one day Nifty will be up 5%, right? So
Mm.
when during that day you just add it in as a second lump sum. So when you
Mm.
do that, so if you capture, let's say you capture somewhere here, then the next
Mm.
1 year you capture almost 100x, right? Sorry, how is
Correct.
100%, right?
104%.
This is
Yeah.
just only in the Nifty. This is only in
This
the
is
Nifty.
like,
Think about
yeah,
now in the
clean and
stock.
safe investing. So you don't have to worry too much. Buy at the lowest level
Yeah,
and wait for a year.
yeah.
Yeah.
but you don't get this opportunity every time, right? So
Yeah,
once in a while you get
once in a
this
decade you'll get
opportunity.
it.
No, not once. I mean, like every maybe 1 year you may not have it. Say maybe 3 years. Every 3 years you may have one of this opportunity, right? So
Hmm.
yeah, so you just have to wait for it. So that is one kind of investing. Instead of doing SIP, you just keep on building your cash and then wait for the news, the front page of your paper to show the market
Hmm.
news of bleeding, and then on that day you go and put your lump sum in, right?
Hmm.
So when there is fear, invest.
Yeah, correct. Thanks a lot, Arun. Great, insightful session. Thank you.
Yeah. Okay. Thank you.
Yeah.
Bye. Okay, G.